Real estate versus stock market pros and cons. Welcome to another video. Today, we discuss the pros and cons of real estate and the stock market. We will give you foolproof information that will guide your investment decisions and generate massive wealth. Now, let's begin, shall we? Pros and cons of the stock market. Pro 1. Liquidity. Accessing money invested in the stock market is easier than other forms of investments, such as real estate, among others. It gives you the opportunity to trade, sell, or buy according to what you want to do at a given time. This makes it easy for you to gain access to your money when in need, without having to wait for a long period of time. The investor, or the stock owner, is therefore able to continue investing in other areas as per his usual plans. You are also able to liquidate your stocks quickly if you sense some impending negative changes in the market to avoid losses. Pro 2. You can make a lot of money. When you understand the stock market well, you can monitor the performance of various stocks you want to invest in and make a killing. One can also use experts so as to ensure you buy the right stocks that show the tendency to grow in a short time, depending on the perceived market changes and trends. Use of the correct tactics can make you wealthy overnight. It is, however, crucial to note that one needs to be cautious and understand the risks of the game before investing in the stocks. Pro 3. Investment capital. When investing in the stock market, you do not need to start with a huge amount of money. You can start small and grow your portfolio, depending on availability of funds. One can choose to buy stocks that are low value, but buy many with the hope that the value will go up with time. This is good for long-term investment where one is not in a hurry to liquidate. Pro 4. Increased shareholding. When you continuously invest in a stock, you can end up owning a huge stake in the companies where you have invested. Investors have been known to buy out companies by investing in their stocks consistently for a long time and increasing their shareholding capacity. Pro 5. Different teams of earning. An investor in the stock market has different ways in which they make their earnings. One way is from the increasing value of the stocks, which you enjoy when you sell and make profits. The other route is through dividends, which are normally paid annually. This will, however, depend on whether the companies are making profits or not. Con 1. Crashing of the stock market. Due to the volatile nature of the stock market, there is always the likelihood that stocks can lose value in a very short time and can result in devastating effects to the investor. Once a market crash happens, it might take a while, even years, to recover, depending on the reason for the crash. It is important to bear this in mind as a potential investor. Con 2. Market volatility. The stock market can, at times, be very volatile, and investors can either lose or make gains. With this in mind, it is advisable not to put all your eggs in one basket, but to spread the risk. One can put together a portfolio that will ensure they are cushioned to the inevitable swings in the market. Con 3. Poor or nil dividend payouts. Investors have been known to encounter disappointments when stocks they have invested in fail to issue out any dividends. This is mainly dependent on the performance of the said stocks in the market. Poor performance will translate to poor or no dividends and vice versa. Some companies may also decide to withhold payments of dividends and channel them to development projects within the organization. Con 4. No control on stock performance. You can buy stocks in various companies, thinking that you have some influence on how the companies operate. This might not always be the case, as most of the decisions made on the running of the businesses may not be privy to all the stock owners. Only the very major decisions made during the annual general meeting are open to the stock owners, and at times to those who own a huge chunk of the company. Con 5. Long-term investment. The stock market works better for long-term investors. This is for those who are ready to wait for their stocks to grow in value before they sell. But for the short-term investors who need short-term gains, this may not be a good thing. If they buy shares or stocks during a decline or immediately after, they risk having to wait for a long time for the value to increase to a level where they can sell and make good profits. Con 6. Time consuming. When you decide to invest in stocks, it is not always a walk in the park. You need to do quite a bit of research and understand which stocks are doing well at present and in the long run. For you to land on the profitable stock, you also need to do an investment analysis to guide you. After settling on the stocks to buy and going through the buying process, you need to continuously monitor their performance so that you can know when to sell and exit. When you watch closely, you will be able to tell if you bought into bad stocks and not be taken by surprise if things turn ugly. Pros and cons of real estate. Pros of real estate. Pro 1. Control. When it comes to real estate, you have more control of your investment than other forms of investment, such as stocks. The investor is in control and is able to run his estate without having to wait for others to make decisions for him. This makes decision-making easy, and one is able to seize any opportunities that arise without procrastination. You are in control and can strategize and steer your business in the direction you want to take. Pro 2. Use as leverage. Real estate can be used as leverage to achieve your wealth faster and also develop your real estate empire. This can be used as a tool to minimize the risks in your journey of increasing your holdings. You are able to use borrowed money in the form of loans to make more or increase your return on investment. Leverage offers a crucial advantage to those investing in real estate, as well as to potential investors, and can help you grow in the real estate market. Pro 3. Value of real estate grows with time. In almost all cases, real estate value appreciates or increases with time. But we cannot forget the instances where one can buy a property in the wrong place, or where it is negatively affected by happenings that get out of hand. However, many are the times when, with the proper research, one can identify a good property that will grow as time goes by. The other beauty of a property is that one can make modifications and increase its value, putting it in a position where it can fetch you more when sold. Pro 4. Provide a stream of income. If you decide to invest in rental properties, you are assured of a flow of income periodically, be it monthly, quarterly, or annually. This can allow you to explore more opportunities in the real estate market and increase your worth. Rental earnings will give you freedom to carry out other businesses, as it does not tie you down, even when managing it. It is one of the best forms of passive income. Pro 5. Grow your equity. Rental income can be used to pay off any debt you have on your property. If you had taken a loan to buy a property, which you rent out to tenants, you can use the earnings to pay off the loan and still make money for upkeep. A well-managed property is able to grow your equity without you having to spend anything from your pocket. At the end of the day, you will own the asset without any debt, and all the returns will come to you to possibly invest in more areas of your interest. This way, you increase your net worth and your wealth. Pro 6. Helps you hedge against inflation. It is common knowledge that when the value of money decreases, the resultant effect is that prices take an upward trend. The rate of inflation takes a toll on the value of most investments. The buying power of money decreases or increases depending on the inflation rate. The good thing is that investments on real estate are able to keep up with inflation. In fact, inflation normally pushes the value of property upwards, making it profitable when you sell it in a few years' time. For those who lease or renew their lease every year, they have the opportunity to increase their rents upward to counter inflation. Cons of real estate. Con 1. Low liquidity. If your intention is to buy and sell and make quick profits, the real estate investments might not be for you. This is because some properties are not easily sold and may take months or even years to get a good buyer. When investing in real estate, it is better when you focus on the long term if your intention is to turn around your money fast. When you plan to sell your property in a haste, you might end up selling at lower prices, making you lose substantially. Con 2. Creates liabilities. You cannot compare real estate to a loaf of bread. When you invest in property, you get into a lot of legal and financial liability. Managing the property, leasing, or renting, as well as maintenance, all add to the liability. There's always a nagging risk that you might lose the profits and income that your property brings in, especially in rentals, where tenants might decide not to pay for some reason, such as financial challenges. It is not uncommon also for tenants to damage property and not maintain it well. Con 3. Transaction costs are high. In comparison to other forms of investments, such as stock among others, the transaction cost involved in real estate is high. Huge capital is normally involved when purchasing property, and since most of the taxes and costs are calculated as a percent, you end up with a high cost for every transaction carried out. Investors should be aware of this so that they ensure they have adequate capital to cater for all costs involved in their purchase. Con 4. Property maintenance and management. When you own a property, it becomes your responsibility to manage it well and ensure it is fully maintained, not only to attract customers, but also to avoid huge running and repair costs. Damage to property by tenants can result in high maintenance costs and lower the value of your asset. If part of the property is not occupied for some time, it does not exonerate you from incurring some maintenance costs through lower. In that case, you are spending money on the property, but getting no income, making it a loss. Hiring managers to run your property, if you cannot do it yourself, is also expensive, and the management fee will eat into your profit. Con 5. Competition. This can happen when your property is among others in a highly competitive area. New properties are always coming up, and with more improved and up-to-date facilities. What is likely to happen in such a market is that tenants are prompted to hop from one rental outlet to the other. This can result in losses from empty properties, especially if you do not upgrade your property consistently. Consumers will always focus on where they can get value for their money, hence the need to be a step higher all the time. That's it for today. Thank you for watching. If you're still here, it means you enjoyed it, so don't forget to leave a thumbs up and share the video with your friends and family. With that said, have a great day, and I'll see you in the next one.